Well, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is the Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Today's date is August 9th, 2024. Let's get started. I'll focus on the hourly chart. And what we saw in trading this week was a sharp move to the downside on Monday. That was helped by the Nikkei plunging 12.4%, sending the Aussie versus US dollar sharply to the downside in the process. And that in that move, we fell below the 2024 low. You don't see it on this chart, but it came in at 0.6361. We fell to a low of 0.6348, about 14 pips below the 2024 low. But as you can see, the momentum could not be sustained, and we started to build back to the upside over the next day, and then into the final 3 days of the trading week as well. In the process, the price traded above and below the 100 and 200 hour moving averages. That's the blue and green lines through here. But the last thing that the price did before moving more to the upside in trading on Wednesday and Thursday was to find support buyers near that 100-hour moving average. That gave the buyers a go-ahead to push to the upside. Indeed, they did in trading yesterday as stocks moved higher and the risk-off type of sentiment into the Aussie versus US dollar started to get unwound. Also, the RBA came out with a little bit more hawkish comments from its governor, Bullock yesterday, and that helped to push the Aussie versus US dollar to the upside as well. Having said that, in the video yesterday, I talked about this cluster of resistance up here, the cluster of resistance defined by four things. One, the 100 bar moving average on the 4-hour chart. That's this blue line right through here. The 50% retracement of the move down from our high price in the July to the low price that we saw in August. That's at 0.6573. And then up here, the 100-day moving average and 200-day moving average is the blue and green lines right here between 0.6593 and 0.66013. And if I take all that stuff away, you can see that in trading here today, the price did try to get above all those levels. It went above the 100-day moving average, maybe about 4 or 5 different hourly bars. So the buyers had their shot to push higher to extend above this cluster of resistance, but it couldn't do it. Each time the price fell off, and finally the buyers gave up and the sellers took over and pushed the price back down toward the low of this cluster. And like on the top side, the price moved below the 100 bar moving average on the 4-hour chart by a few pips, but could not sustain the momentum. And now we trade right around that 100 bar moving average. That's going to be the defining level for this pair, or the defining level for the bias in the short term. If we can trade below the 100 bar moving average and the 50% retracement and stay below that level, then we could see more rotation down toward the rising 100-hour moving average. And then we'll deal with the 200-hour moving average after that. However, if support buyers continue to try to hold support against this level and push back to the upside, we still have those 100 and 200-day moving averages on the top side to deal with. They're not going away, folks. We got to get above those levels to increase the bullish bias from a technical perspective. It's just that simple. So there you have it, a look at the Aussie versus US dollar from a technical perspective. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.